So a quick recap of what we've seen with markets since the start of this week. Certainly we have seen pretty much resilient markets, especially here in Asia. So despite what we have heard last week with regards to geopolitical concerns with the war of words between President Donald Trump and also North Korea, this week the jitters have pretty much receded. So we have seen Asian markets itself been up with the MSCI, the MSCI Asia Pacific, excluding Japan index itself being up about 0.8% week to date as of Wednesday morning here in Asia. And certainly the markets themselves have also largely shrugged off weak data coming through from China on Monday, especially with retail sales and industrial production missing estimates. In addition to that, we also have heard some developments with regards to US starting this probe with respect to trade relations with China and highlighting intellectual property rights. But as things stand, that itself could actually be a long-drawn process. It will take about more than a year before we can see any progress over there. The market itself had really chucked it to one side as well. But that said, we could really see the key movements this week with respect to the US dollar. So at the start of this week, we have heard from Federal Reserve New York President William Dudley that his comments came a little bit on the hawkish end, highlighting to the markets that he still sees one more rate hike before the end of this year. While we recall, as of Friday's market, the WIRP, Bloomberg's estimate for the markets based on Fed Fund futures have only seen about 0.25, so that's only 1/4 of a chance that we might see a Fed hike before the end of year based on the traders themselves. But as of currently, we are certainly seeing that percentage tick up to 0.4%. So I think what is really open for the markets is the fact that the Federal Reserve themselves may largely shrug off the weak inflation numbers and look towards raising interest rates once again before the end of the year. And certainly for markets, that's going to be one of the key things to hunt for during the Federal Reserve minutes release that's going to be due tonight, and it's 2 a.m. here in Asia on Thursday morning. So we've seen the dollar index itself briefly shot up as well overnight, with retail sales surprising on the upside at 0.6% month on month. Dollar index was seen touching 94.13, breaking above the 94 level, but that's it. Prices have pretty much reversed to trade below that level at this current moment. So I do think that the market is really going to be focused to the Fed minutes that's going to be due out today, with the special interest on the rhetoric with surrounding interest rate. And should we really see a substantial close before the 94 level, that's going to help to see more upsides for the very battered US dollar. So that said, we do have other things that's going to be really due for the rest of this week and things to really keep watch of. So on Thursday itself, we still have Australia's employment data after the wage index that was due this morning, and I do think the market, especially those trading the Aussie dollar pairs, is going to pay strong focus to this key indicator on the labour market. In addition to that, the ECB minutes will also be due on Thursday, and we'll recall this very bullish hawkish rhetoric coming from ECB President Mario Draghi in the meeting. So that is going to be another thing that could actually pose some upside bullish bias for the euro dollar. And for the local Singapore market, non-domestic export is going to be due on Thursday, and we have seen week to date decline for the Straits Times index at about 0.1%. So do keep a lookout for that number, with the market currently expecting numbers to tick up in the coming release.